Hey guys, welcome back to the channel. And before we go any further, I want to give a big shout out to all of our subscribers. We are currently at 301 at the time of this video, so we did hit another milestone at the 300 mark. Next milestone up is 400. So guys, if you enjoy our content and have not subscribed yet, go ahead and do so now. It only takes less than a second to do so if you enjoy following along with us. So I appreciate all of you who have subscribed and have followed along on our journey to 1,000. So other than that, guys, let's dive right on into it. So guys, today's video is going to be about selling a stock. We're going to talk about when you should sell a stock, how to figure out if it's a good time to sell or possibly hold on to that particular stock. This was requested by one of our followers. So if you do, guys, if you have any type of information you'd like me to cover, please comment below on any of my videos and I'll do my best to dig around, get some information for you and make a video for that. So the number one thing for me before putting any type of money into a stock is having a plan, okay? And you need to decide, is it a day trade, is it a swing trade? If so, how long is it going to be? So obviously if it's a day trade, you're going to be in it for the day. If it's a swing trade, you need to decide how long are you going to be into this particular play. So for a swing play, it could be, this stock was on a good uptrend, had some, bad news and it was an overreaction and got beat down. And you're like, man, this is a really, really good price point. I can buy this particular stock and it may recover. If I buy it on Monday, it might recover by Wednesday, Thursday, or Friday. And then I'm looking to cash out because technically I don't know a whole lot about this stock. I've never been interested in taking any type of long-term position, but I see that I could possibly make some money. Okay, so you need to have a plan of action moving forward as far as when you would look to sell that stock. And on the flip side, you know, if you buy into it and you're like, I'm not 100% sure on this particular play, I want to take a swing position, you need to understand, I'm in it for just this particular week because I know that it should go up, but if for some reason it goes down, I need to be able to handle my emotions and cut losses at that particular time in order to move on to another investment. And if it's a long-term investment, then you need to understand too of how long am I in this stock for the next year, 2 years, 3 years, 5 years, 10 years, okay? And that's going to make you really become more patient when you're watching this play. If it's not shooting up and going up, then you understand, I'm not in it for just for the week, I'm in it for the long haul. So I really believe in this company. I've done my due diligence. I've checked out the balance sheet. I know where they're going, not just today, but 10 years down the road. Okay. And it makes you feel more comfortable holding on to that position, even if you're potentially down for the moment. It makes you okay because you know it's going to take some time to develop and it kind of keeps your emotions in check. All right, guys, so if you're in it for a swing trade, so you want to define a clear entry and exit point for that particular play. And if you don't know what I mean by a swing trade, it's sort of like flipping houses. If any of you watch HGTV, when these people go buy these homes that are completely beat up and undervalued, they fix them up, they sell them at a higher value. Swing trading is no different. All you do is you buy a stock when it's undervalued, and whenever it comes back to life and it's overvalued, you just sell out and take profits. All right, so it's important you get clear entry and exit points. And the good thing about this of defining these clear entry and exits, you need to kind of have some familiarity with the stock, I guess, of knowing where it's been trading, how high it's gone in the past, X amount of days or X amount of months. And if you don't, then it's understand, you need to understand how to read the chart. So if it's a stock that I'm really not familiar with, but I can actually tell it's been on an uptrend and it got beat down and it's undervalued, then I can see clearly that, man, if I get into this stock now, it's got some room for upside, I can make some money. So learning how to read the charts is super important. And I keep talking about this in my videos, guys. I'm going to have a playlist that's going to appear at the end of this video that has about 7 to 8 videos breaking down how to set up your indicators and read those indicators. You need to go ahead and take a look at that if you haven't already. On a swing trade, you should also do a stop loss. This is something I've got burnt on several times. That's why I recommend it. Is if you're getting into a play and you're in it for a short-term period, you want it to go up, obviously. But what happens if it goes down? Then you want to have like a clear entry point, and for sure that exit point saying if it drops maybe 10% over this next week, then I need to just cut losses with it because it's not performing like I wanted it to. Okay, and that way, if it drops that low, yeah, you lose money, but you need to kind of manage your risk and figure out I'm okay with losing maybe a small amount of money if it does drop, okay, as opposed to letting it keep on riding down and down and down, and then now you're stuck waiting for it to recover. Because I've been in those situations before, and it's not fun because it ties up your money, and you're sitting on the sidelines watching all these other stocks perform while you're caught up on this particular stock. And guys, be disciplined, okay? If your stock moves up and you said, I want to make 20% on this play and it's up 20%, cash out. Get out. Don't be greedy, okay? Because chances are it's going to come back down and you're going to miss out on those profits. I recently have been learning about options, and I did my first option this past week. I had a call on GNUS to hit $2, and it got up to $2.08 off of some news. And I got excited thinking it's going to continue to go higher and I'm going to cash out at a higher price. And then it fell back down, and my my option expired, and I ended up losing money. So good thing about that is I only lost what I put in, which is $18, but it's still $18. I could have made about 10 bucks as opposed to losing 18. So it's important to be disciplined, and I'm saying that because I'm in those situations too. I live it. So, have a clear entry, have a clear exit, and stick to the plan. For longer term positions, it's important that you understand that you need to be patient. If you're in a stock and you say like over the next 1 to 2 years, it should double, well then understand it's going to take 1 to 2 years most likely for it to double. I was recently in a play that, I put money in, and it took less than a year, but I was expecting 1 to 2 years it was going to double, triple, quadruple, and it finally did. But I knew that I had to watch it every single day, do nothing, and even be down in that position, for a specific period of time. But whenever it decides to move, it's going to move. Can you imagine those people who held on the Tesla for these past 3 or 4 years? And can you imagine being the person who sold whenever the market crashed, and look at it now, So just be patient with those stocks if you really do believe in them. Have a clear exit point in your mind of when you think it would be a good point to cash out. Average down whenever necessary and possible. So over that time period, if the stock is staying at those current prices that you find it's attractive, average down or even just add to your position if you see that it's slowly going up and you think that the stock's going to be valued a lot more than what it is. It's okay to average up as long as you feel that that company's heading in the right direction. And then, of course, guys, stick to the plan. And if your exit point's $10 and the stock's currently at 4, then if it's moving in the right direction, guys, just hold tight and wait for it to hit 10. All right, again, guys, what if it drops? So your swing trades, you're going to cut losses quick. You're going to set your stop loss and then bounce out. If you don't have a stop loss, then you need to, cut losses quick and whenever you feel like it's a time to get out if that stock's not responding. On the long term, you can average down by buying more shares at the appropriate times. And it's always okay, guys, to cash out sooner than anticipated if that stock spikes a lot quicker than anticipated. So if I bought in at 250, $2.50, and my price target's $10, if the stock shoots up to $10 temporarily, like over the next month or two, you could always cash out because chances are if it rides up that fast off of some hype, it's going to fall back down and you can always re-enter. So don't be afraid to take profits and re-enter at a lower price point because you can buy more shares that way. All right, guys, so really quickly, I'm going to go to the charts and I'm going to show you when you can make a decision on when should I sell this particular stock, when should I re-enter, and then again, don't forget to check those videos out at the end of this video, and it's going to give you a better understanding of what I'm talking about here on the charts. Okay, guys, so real quick, I'm going to show you how to identify a clear entry exit point for a swing trade. So anytime that you're below the 30% mark on the RSI, right here would be a good entry point on a stock because it got pretty beat down, and then you can ride it up to where it gets closer to overvalue. So like if you'd have bought here at about 13 bucks, 13.39, and it could have rode up to almost 17, that's a very, very good swing, and you could exit there because it's getting close to overvalued. Okay, on the fib level for a long-term play, you see these different levels that we have here. Okay, and you can see that this stock is pretty close to the bottom of the fib level. When you buy around these levels here, you see that you have a lot more room for upside for the longer term, okay? And you can potentially make a lot of money, double, maybe even triple your money, depending on what levels that you get in at. So this would be more of a longer term mindset. So like I bought in around these levels initially for this particular stock, and then as you could, it was right dab in the middle of the first level of that Fibonacci retracement level, and then as you see, it went all the way up to about 2810. And if you understood and had these indicators set, you would understand that it would be a great time to sell here, because you just got all the way at the very top of the fib level. You got rejected, so you knew that you were coming down. It lost a lot of steam coming down, and now hopefully history will repeat itself and it'll make an uptrend and retest those highs eventually sometime this year. Here's another play, guys, CCIV, and this was a big time hype play pre-merger, and you can see it had a low of 950, a high of 64.86, and if you were in this play, then you got in at the very bottom here, and you kept riding it up, and you saw that it kept busting through these resistance levels. Then you had a lot of momentum, especially pre-merger. It kept going up and up and up. Anytime you have a stock going up and up and up like this, guys, it's going to come down. It's going to come down hard, okay? So even if you're in this play for long term, whenever it hit in the 60s, you should have, taken profit here. And then as you see it, it got, destroyed. And now it's back down closer to the bottom of the fib level. So you could have made a lot of money and then cashed out and then rebought at these levels, and you could have added more shares to your portfolio and now just kind of chill out and wait for the long term, because now you're sitting pretty, as opposed to it moving slow and having to buy more shares at an expensive price. Here's an opportunity where you can buy shares, cash out early on an initial spike, sell, take your profits and re-enter for your long-term position at lower price points. Guys, here's a quick example of when to sell on a swing trade. So let's say that you bought here around the um, let's say you maybe bought here, has a buy signal right here at the, close to the $5 level, and you bought it, but you know that you have a key resistance level right below you. Then you can maybe set your stop loss right below, that support level. You can set it below the support level. That way, if for some reason it does get rejected like it did here, then you can get cashed out early, as opposed to, losing all this money on the long term. So in my opinion, if you're buying around a support level, like if you buy here, then I would set a stop loss about right here, just in case it does get rejected and we go below that support. And there's also something called a trailing stop loss, meaning as your price goes up, your stop loss trails and goes behind it also. That way you can maybe lock in some profits that way as well. That's all I got for you today, guys. I want to thank you guys for watching. Make sure you like and share the video. Subscribe to the channel if you enjoy our content. Hit that notification bell and comment below on anything you want us to cover moving forward. So other than that, guys, we'll catch you in the next video.